Our next speaker here is Kevin Smith from Renaissance Oil Corp. Now, this company has the absolute largest catalyst in its being. In fact, the reason the company was formed was to test these upper Jurassic shales. We're very hopeful they're going to be quite virgin-style pressures and flow rates, you know, hopefully some very big wells. And that catalyst is coming up. And this has been a long time coming. I've been with this company now. I was kind of surprised when I looked at my portfolio and the dates that I bought the stock. I bought this stock in 2014. It's highly unusual for me to own a stock for 4 years. Highly unusual. So, and I really think that now, happy to see, now that we're in a good oil market, happy to see how this big exploration plays out in Mexico. So, Kevin, please come and give us the update on what's happening. And so the break is at 11, but there will be coffee at the back that you can go to see here starting in about 5 minutes. Okay? Very simple, forward and back.
Forward and back, okay.
Okay.
All right. Thanks, Keith, for hosting us again. Like we have been doing his conferences here since 2014 when the company was created. My name is Kevin Smith. I'm filling in for Craig Stanker, our CEO, who had to be away in Mexico working on a very interesting deal. So, and that's kind of what's characteristic of Mexico right now. There's just a lot going on. And so anyways, Renaissance Oil and Gas, I joined in 2014 when the company was formed. We're pure play for Mexico, and we were put together specifically for Mexico as Mexico has entered into this new energy reform. And it's ended basically 76 years of monopoly that Pemex has had. In that time, we've acquired a number of properties, built up the portfolio, and one of the biggest blocks that the biggest block that we've recently acquired last year is this Amatitlán block, and that puts us in this partnership with Lukoil and Pemex, two very large oil producers, both about do 2 million barrels a day, and we've taken over operatorship developing that block now, and we've been very active this year on it. And as Keith mentioned, we've identified a shale play on it, the source rock for much of the conventional production in the area, and our estimates are about 6 billion barrels of oil in place. So it's this huge prize, an untested shale play that's basically something we'll be targeting in 2018. In fact, we're looking at it right now. We'll be drilling it shortly. We have the service rig on site preparing the location, and it's something that's we've been waiting for quite some time, and it's been a bit of a it's been quite a stretch to get to 2018 and putting the portfolio together, and all of a sudden we're finally very active in the field. And so we'll be the first international company to drilling a shale well in the country, and we think it's going to unlock a lot of value. We're currently at about 1,650 BOE a day, pretty modest start that puts us in the top 5 largest oil and gas producers in Mexico, including Pemex. It's an indication of how early it is. We raised some capital here earlier in the year, and so we're funded to $12.5 million, and that gets us right through our program at Amatitlán, the drilling of the 12 wells we've drilled to date, plus the shale well, and so still early stage. We're about 25 cents where we were in 2014, so the stock really hasn't moved in that time. Of course, we come out of a nuclear winter for oil prices, so the commodity price is working in our favor now. Why Mexico? It is a unique opportunity. Prior to joining Renaissance, I spent the last 15 years in Calgary investment banking, and I basically was a good career path, and then finally I got a knock at the door from one of my former clients, and he outlined the opportunity that was Mexico, and it's a I don't know, hopefully it's a once or twice in a lifetime opportunity where a country this close with such rich oil resources that's been sheltered from capitalism and entrepreneurism for 3/4 of a century and that's just ended. And also, while the rest of the world has been going after the unconventional and using the new techniques and completions and drilling to get after, tighter, more difficult reservoirs and formations onshore, Mexico has basically focused all of its time on offshore, and it's been, fairly successful. At one time, Mexico was the second largest producer of oil, kind of 100 years ago, and they've slowly grown that up to 3.5 million barrels a day, mostly in the Bay of Campeche. The Cantarell field and the offshore field were very, very generous and produced a lot of gains, but the country had declines, and the 3.5 million barrels a day is now sitting about 2 million barrels a day, and so they opened the door to foreign capital, and that's when we basically put ourselves together as a pure play company to go after this. And what that means is there is just a massive amount of deal flow. We've seen lots of properties come to market that are either coming from the government or Pemex themselves looking for partners. Just recently, on April 27th, the most ambitious farm-out program happened from Pemex, where 23 blocks have now come to market with 30,000 barrels a day of production and 150 MCF of gas. And this is, there's opportunities like this where, and there's not a lot of, competitors in country yet, but that'll change. And we certainly put ourselves to have a foothold in this. And we just think it's an excellent environment to grow an aggressive junior oil and gas company. So the block that we acquired, that we partnered with Pemex and Lukoil, is the Matitlan block. And it sits right in the heart of the, one of the largest basins, the Tampico-Mazatla Basin in Mexico. And just last year, IHS came out and labeled it a super basin, one of the 24 super basins globally. And I mean, the criteria for that is having produced 5 billion BOE and at least have another 5 billion BOE left to be recovered, and multiple source rocks and multiple formations, and and they've likened it to the Permian, and we're fine with that. But it's quite a prolific basin in its history, and we think it's got a lot of future ahead of it. And as far as the information from the National Archives in terms of resources in place, there's about 35 billion BOE in prospective unconventional resources, and there's been no unconventional resource plays to date in Mexico, so it's all untouched. We're starting to see a lot of larger companies position themselves. We came in early, relatively early in the process, and tied up a Matitlan that we believe is right in the heart of the Tampico-Mazatla Basin, and we'll talk more on that. So a little bit about the Upper Jurassic shales. Sophisticated audience here, obviously in Calgary. First time we've done this presentation in Calgary, and normally I need to explain what a source rock is, but obviously, that's been where, after the wildcatters of Texas have, made a lot of conventional discoveries, they've gone after the source rock, the tighter, which recently was very hard to complete and make produce. And so Upper Jurassic has been the major source rock for just basically the oil and gas industry. And Cerro Azul 4 was a well some time ago, but a huge 250,000 barrels a day, largest well ever. And it's in the Tampico-Mazatla Basin, sourced from the Upper Jurassic shales. Cantarell, the largest offshore oil field in the history, of over 2 million barrels a day of peak production, all comes from this really thick Upper Jurassic deposition, and we think in Matitlan, for a number of reasons I'll show you, is right in the heart of this. So at Matitlan itself, 60,000 acres. It's an opportunity you only get in a new country like Mexico to have a block that large. We're also surrounded by other blocks that we think there's a chance to consolidate, and we're really looking to gather up as much land as we can ahead of the shale play, I think, advancing, and I think will be a big reason why we think it'll be advancing with our appraisal well coming this year. We're targeting a horizontal well. We'll probably be drilling that starting this summer, and we'll probably have results late Q3 into Q4 in terms of a production test to do proof of concept that the shales do produce. To the north of us, more in the gas window, There's been a couple of wells that Pemex has drilled that have had test rates in the 10 million cubic feet a day range. So we know that the reservoir is charged, and we believe that we're more in the light oil condensate, a little bit less thermally mature window, and I'll talk a little bit of how we got to that. We've been drilling into the shallower Chicontepec formation as basically part of our farm-in with Pemex. We're now on to well number 11. High hopes for the Chicontepec. Pemex has 4.2 billion barrels in place on our block at Matitlan, and think the recoveries are somewhere around 40 million barrels. That might be a bit aggressive, and we'll see what we'll do. We are developing it and learning about it. We're trying new fracture techniques and multi-pad drilling to get the cost down, and so we're having good success. Our first well came in at 250 barrels a day, which was fantastic. We've had some that were quite a bit less than that, and on program, we're assessing that. But really our focus has been on commercializing the shales. And so the Upper Jurassic shales, there's been many wells that have traveled through it. On our block, there's been 4 wells that have gone through this formation and gathered cores, and then 20 other wells in the area. So we've had access to lots of data to understand that it is very thick. It's got a high TOC. We've done some 3D imaging. Our chief geochemist, Dan Jarvie, was one of the first foreigners to ever go into the core depositories in local Poza Rica, Mexico, and able to bring these samples back and do modern testing in the labs in Houston. And so, yes, it's exploratory, and yes, it comes with risk, but the idea of the shales and the thermal maturity, we have a very good idea of that it's homogeneous throughout our block and quite thick. So we've done a lot of work in terms of the homework on it and where we're landing our first well. But proof is always in the pudding, and that's why we're looking to do a shale test this year. So the comparisons, as Dan Jarvie says, very similar to the Eagleford Shale in South Texas. It's high carbonate and very similar in the mineralogy and TOC. It's very similar depth, overpressured. I mean, the main difference is that the Upper Jurassic shales is about a little over 3 times as thick. It has a similar resource concentration, and so what that really does, it really drives the resource in place per acre. And like we said, if we get to somewhere around, the recovery is in the hundreds of millions of barrels is what we're targeting. So it's a huge prize. The value of the block on full development, we expect to be in the billions of dollars. So it's a big prize, and it's a big challenge for a small company like ourselves. But I'll talk a little bit about the people that we've taken on the team to tackle this challenge. This is, you probably can't see this, and if you want to, you can, our presentation's online, but the chart that Dan had put together in terms of just a comparison of the Upper Jurassic shales to some major shale plays, a little bit more mature, and most of it's a marine carbonate deposition. We think it's going to be quite clastic and brittle, taken to a frac, high carbonate content, high TOC, and overpressured and quite thick. And so when we put it in terms of resource concentration and the hydrocarbon generation potential by area per section, it ranks quite favorably to rest of the major plays. And so, I mean, it's early days. A lot of people have not heard about this play yet, and we think it'll be breaking open this year. Pemex is also drilling a couple of wells, and so those are basically will be coming out as well. So I think our ability to keep this quiet is probably short-lived here coming this year. One of the wells to the south of us was the Coralillo 57 well. It's this blue curve on the bottom was 2014. So there was a test well into it. It IP'd about 650 barrels. We think it was more in the black oil window. We're looking for more of the volatile oil charged with gas for the higher deliverabilities. And so we think that, within program, that these wells will be IPing over 1,000 barrels a day and recovering 1 million barrels of oil. Is our type curve that our geoscientists have put together. And it likens very similar to the Eagle Ford, or our original wells. Well, the original wells were well below 600 in Eagle Ford, and EOG has recently been getting over 1,300 barrels a day on their laterals. And so we hope that over time, the Upper Jurassic and Mexico will follow the same curve in terms of increasing production. And I think it's going to be a huge play on our block and all around us. We kicked off our drilling in December of last year. We've now drilled the initial 10 wells that was the original program. We've increased that to add another 4 wells in Chicontepec. Pemex has said that we are the most efficient operator in the basin right now. Not a lot of competition, but we've been able to get the well from spud to release down to 12 days. And really trying to attack the cost structure. That's something that Pemex was never really that good at, keeping their costs down, and large organizations. So that's been working out very well. We've placed 6 of these wells onto production. The rest of them are in various stages of being fracked, and we've been recovering the frack fluid and the water. And so we're going to put these together in a bundle, and we'll have an idea of what we think from this appraisal plan going forward. Pemex, they have on the book, 2,400 locations for Chicontepec on this block, so there's lots of running room. We're weighing that off against the shales, and of course, with the shale well being completed this year, we'll have a lot of evidence of where we'll be directing our capital towards in the next year. Just for people that have generalists that don't understand the oil and gas industry as much, but when we initially came in, we acquired our stake, which is a 25% stake in the contractor's share of matted land, and we're roughly $150 per acre if you look at what the acquisition cost was. We're very much on the low end of the scale in the early entry. We're dealing with old logs and some regional geology. We've recovered some cores, and we started to do our own work, but we're really within the first couple stages here. And what we've seen in the Permian and Marcellus and all the other basins as they become proved up, obviously there's a massive shift in value on a per acre basis, and obviously some of the comps in the Permian now are going for $60,000 an acre. Not something you're necessarily going to see in Mexico, but with a discount, the right scale is basically in millions of dollars in terms of what the value of the land is. We're targeting to have, basically a third to 50% of the block by the time it's done. And so, that to us, it could be worth over $1 billion to our company. It's very impactful. And that's where we're on the path to make proof of concept and start the commercialization of this, and something that it's easier to do for smaller new entrants, and tie up as much land as possible in this play. So speaking about our production, we were awarded these 3 producing blocks in 2015. They came with about 1,650 barrels a day of production, which is about what they're doing today. We've seen no declines on it, and Sproul, our evaluator, basically just gave us back the same reserves again, because we've had no decline, so we had a positive revision upwards of what we produced last year. It's a solid base. We'll be drilling probably 3 to 4 wells here coming this year. One of the wells that we're producing in the northern field, Mundo Nuevo, they're doing about 200 barrels a day with some gas. I mean, the well originally came on at 5,000 barrels a day, so there's pretty prolific wells that have come out of this area. We think there's modern 3D seismic over it. We've identified our locations, and we're just allocating the contract to rig operators now, and we'll be looking at we expect we'll probably take the 1650 and likely triple that production this year. The key to this is it's infrastructure's all through the block. We got pipelines that take us to market. We sell our product to Pemex. We get a pretty good price for it. We're about 60% gas. And in Q1, our average gas price here per MCF was a little over $4.90. So it's a decent place to be producing gas. Oil obviously drives the economics here. And as a result, we have no on-site separation or lifting costs. We keep our operating costs quite low. And for 2017, our first full year of operations, we're at $3.19 per BOE op cost. So that leaves a decent margin. We have a decent royalty to the state, but still, it's positive netbacks, and we're doing quite well. It gives us free cash flow. So it's been quite good to get us into country and learning how to operate. And the sea of blue that is around us, those are all the Pemex blocks. And much like our blocks, they've been left fallow since the 80s when they were first discovered. All the capital went offshore. So there's been no development in this area. We call them mature fields. We call them neglected fields. And on April 27th, everything in blue just went to market. So they're all being farmed out. These fields and all around us. And so in this area, by far, we're the largest independent operator because there's a couple of pink blocks down there, but they don't have any production. And so we've had, and some of these are pretty huge opportunities, and some of them smaller. So October 31st is the auction for these. We think there's a couple of company makers within there. Of course, we'd have to win at auction, so we're not talking too much about it. But it's great evidence of all the deal flow in this country and the ability to grow and apply capital. We've been very lucky that, throughout this whole downturn in oil, we've got some pretty connected shareholders and a board, and we've always been able to raise capital. And I think, if there's a huge opportunity, I think that there's a chance for us to bring to bear private capital, which is just something that doesn't exist in Mexico. It's all old money and family money, multi-generational money. So, and which knows nothing about oil and gas. So, this is the kind of the baseline. So we've got some great organic growth to come through the drill bit, and really at the same time we're advancing the proof of concept of this shale play. So the shale team, to put the group together, Dan Jarvie, who worked with Craig Stanke, our CEO, in a prior company, was called Realm Energy International. And they used to be my client, was an investment banker. Great story. It went from 10 cents and finally, in a couple of years, they gathered shale properties across Europe and ended up selling out for over $1. And it made huge returns for my shareholders and my clients, and we got great fees as a banker, and it was a great success story. So Dan Jarvie, upon finishing that stint at Realm Energy International, went to become the chief geochemist at EOG Resources, the largest unconventional oil producer in the world. And so looked at projects all over the world, rocks all over the world. Of course, the big play they have is the Eagle Ford, and so brings a massive amount of credibility when we're dealing with other operators and other landholders in the country that when he's mapped out the petroleum system in the Tampico-Masantla Basin, that it's one of the best in the world that's done this. And so he worked with a group that was at Mitchell Energy back in the 90s when they cracked the code for the Barnett Shale. So this was the team that basically kept at it until they finally figured out how to produce from shales. And Nick Steinsberger, drilling completions engineer for us, he invented or came up with a slick water frac, and has gone on to drill 1,200, 1,300 shale wells. And so he's designing our well program. in Mexico and brings a wealth of knowledge and of course Dan Stewart and Kent Bowker, who were the geologists with Mitchell in mapping it and as well are as part of our team. So Mitchell was a great success story for George Mitchell, sold for over $3 billion to Devon. And so this is the team that's been working with us for the past couple of years, pointing us in the right direction and making, basically telling us you have to acquire matted land and you should probably take a good look at your neighbors. Ian Telfer is our lead director. A big reason why we raised capital. He's got great connections on Wall Street. He was the founder and past president of Gold Corp. Built that business in Mexico by acquiring the 4 largest mines in Mexico, and Gold Corp is the largest producer in Mexico. And so when the time came that oil and gas was opening up, Ian was actually partners with Craig on Realm Energy International, the previous company. So they got together and said, we have to get into Mexico because this is going to be the biggest opportunity in the next 10 years. And so, and then of course, convinced me to join, and it's, we built a company around it since then. Gord Keep, Fiore, he's a director. He makes my investment banking career look quite small to considering how successful he was at it. And he's a guru of corporate governance and basically runs the corporate side of our listing on the Toronto Stock Exchange. Skander Malaki just joined our company. He was the one-time largest shareholder of Tullow Oil. That worked out very well for him. He's been part of many oil and gas companies. He just joined us in December. He is a terrific entrepreneur and has massive connections globally and right into Mexico, and he's been a great addition for us recently. So management team, we talked most about that. So anyways, to wrap it up, Tampico Masantla is now open for outside investment. We're one of the first peoples in there. We think this is an area that's going to explode. We're hopefully growing in there, but we've already captured an interest in 60,000 acres, and we think that there's huge oil in place. It's going to be competitive, but we have probably a leg up that with the drilling that we'll be doing ahead of new entrants. I think that we'll have a good chance to expand our property. And if we don't, we have already a company maker within the portfolio. And of course, we'll be growing our assets in the Chiapas, the southern region, and we think that Mexico is the place to be for years. And we have an objective of maybe not being the next Gold Corp of oil and gas, but we certainly have some high aspirations in terms of what we're going to turn this company into. Thank you.
Question for you here. What will the drilling costs be in the upper Jurassic? Like, how long will that take to drill? And what's the depth?
The depth to the bottom of the shales is about 4,500 meters, and it'll be about $14 million. And so about US, and that's $3.5 million net to Renaissance, because we're 25% of it. And so we're funded for that through our last fundraising effort. So it's
What's the creation on that one? And how long's the horizontal?
the horizontal is looking at about 4,000 feet, and it'll be multi-stage fracked. So I mean, I don't know how many stages we're going to do. But I think it's not going to be huge. It's not going to be 30 stages. We're going to probably try and learn as much as we can from it. But we're looking at a test rate. Nick told me. I asked Nick yesterday. I said, what's a good well? And he's like it has to be over. We're going to beat the Coralio 157, so we'll be north of 600 or 700 barrels a day. Might not get to 1,000 barrels on the first one, but I mean that's where we're looking to get to.
I'm sorry, how long?
How long to drill? It's probably about 60 days. So it'll.
Are all 60,000 acres prospective for the Jurassic?
Yeah, we believe so. I mean, we have logs and cores from the corners of the block, and we believe it runs right through us, right through our neighbor to the south, and to the neighbor to the north, and so we think it's pretty homogeneous. The thickness changes, you know, and it gets a bit gassier the further west you go, and it gets a bit oilier the further east we go, but we think Imatalan's right in the sweet spot. I think it's also worth pointing out too, I forgot to mention this, but you know, we have the option to increase our stake in so I'm going to say like in the operator share. We own 25% of the operator share, which is us and Luke Oil. And we have the ability to increase that through an option post the drilling of these wells to 62.5%. So it's quite a good chance to ramp up our ownership upon success, of course, too.
So guys, I'm gonna stop it there just to keep on time, but the break is in half an hour. Kevin's gonna be here for the break, so please don't hesitate to grab him by the shoulder and ask him a few questions during the break. We're gonna move on to our next speaker. Kevin, thank you so much.
Great. Thanks, Keith.